All right, well, welcome back, everybody. Hopefully, everyone's gotten settled in. Again, this is Kelly DeLucia with Welch Team at Keller Williams. Going to go through our weekly local North Florida real estate market update and chat about some things that are impacting our neck of the woods. And for today, it's just me. So, congratulations, everybody. You've got me today. George is out in the field, but we wish him a happy inspection. Hope it all goes well, and he'll see us next week. So, quickly jumping in, let's take a look at what's happening with our numbers in terms of inventory levels. Again, every week I'm sounding like a broken record over and over again. Uh, our inventory levels are just super low. They're low nationally, but our local market, we are really struggling to find properties for buyers out there because our inventory levels are just so low. So, like we talk about every week, at least over the last several months, the number of new listings that are hitting the market are much lower than the number of properties that are going under contract each week. So over the last 4 weeks, you can see how these numbers have totaled up. And when you take a look at them, there's a 21% delta between those two numbers. So now is really a great time for those of you that have been thinking about putting a property on the market. This is a great time, not only because inventory levels are so low, but, with that, we see home prices on the rise as well. So tagging into that, we have shared a couple graphics each week about buying power and what happens to your buying power when interest rates are low. And that's one of the things that's really keeping the real estate market propped up right now are our low interest rates. And certainly it is creating a frenzy for buyers that want to take advantage of those historically low interest rates. So this is a really neat chart. I like the way that you can kind of go up or down on interest rate and, on one axis, and then you've got price on the other axis. And you can really see, for instance, what happens, even if you're paying $250,000, if your interest rate is 3%, that same $250,000 price, if the market were to go on the decline and then your 250 house would now be 214, your interest rate's going to go up. So you can see how a house that is 214,000 could actually cost you the same amount of money as a house at 250,000 with a lower interest rate. And those are one of the things that we really have been pushing to everybody. You hear it's a seller's market, it's a seller's market, it's a seller's market. And yes, home prices have gone up. It's extremely attractive given the inventory levels for a seller to put their home on the market. That's a huge boost, to the seller side. But with those interest rates being so low, buyers are having even greater affordability. And this chart really points that level of affordability out than if they were to have purchased 8 months ago at a higher interest rate with a lower price. So you hear it's a seller's market, it's a seller's market. Maybe I should wait. We get this question often. Should I wait? Should I wait until 6 months from now, a year from now, when home prices might come down a little bit? Is that a better time for me to buy? And here is a really great depiction of even if home prices were to go down, that interest rate will go up. And you can really see how that buying power that you have right now will go away. So you'll be in an entirely different price bracket in terms of homes that you may or may not be able to afford. So even for those people who think that it might be more advantageous for them to purchase next spring, next summer, next fall, now is the time. The interest rates can only stay low for so long. And we will see, or inventory could start to tick back in. So you see people talking about forbearances and foreclosures and what happens when maybe the forbearances come due. Will we see a huge influx of houses hit the market and then, creating different inventory levels? No, those are going to come in as a trickle. Those foreclosures, when they come up, they're not going to all hit at one point in time. They're going to trickle onto the market and they're not going to have a massive impact on our inventory levels. even if those inventory levels come up, you're going to see increased interest rates most likely in the future. And so you can see how, even if we go up to 3.25, and prices come down slightly because inventory is on the rise, your payment remains the same. So now really is an opportune time. And again, I see some people have joined us. So if you have joined in, welcome. Hi, Chris. Hi, Tom. Hi, Katie. If you have any questions at any point in time, you guys please type them out. I am trying to monitor them as I go through. So again, super great informational picture here on what happens with pricing and interest rates, and how even though you hear over and over it's a seller's market, buyers, now is your time too. Why are we seeing those home prices go up? Well, just like our inventory levels here in North Florida are really low, very, very, very low. Our inventory levels here in North Florida are very low because, one, people have stopped putting properties on the market, maybe for personal reasons. Maybe there are certain situations due to COVID or otherwise that they haven't been able to put those homes on the market, but also because here in North Florida, our population has grown. So our population has increased, and the number of homes that have been hitting the market have not kept up. So you have more people living here, less number of houses comparatively available, leading to an inventory shortage. So same story that we've been sharing over the past 6 months, and you're seeing this on a national scale too. So this is a national chart of inventory of existing homes. This doesn't take into consideration new construction, but this is the national inventory levels. You can see that they've been going lower and lower and lower month by month. And what is that doing? That is creating, higher pricing. Again, for people across the country, we're seeing record highs for some areas, and North Florida is certainly in the mix on that. We are at an all-time low in terms of inventory level in the Northeast Florida Association of Northeast Florida Association of Realtors MLS, so our NEFAR MLS. And then even if we talk about builder inventory, so builder inventory right now is extremely low. You're not going to see a bunch of spec homes out there. You're not going to see a bunch of pre-existing homes, waiting to move in. So if you are going to build a property, one, you're seeing increasing pricing on those properties because cost to those builders has gone up, and because the builders are also taking advantage of the marketplace that we have with the sheer demand for homes, sheer demand from buyers. So they're adjusting their prices to take advantage of the market as well, take advantage of that economy that they're seeing happen. So, a good example, builder that was local builder, I can't speak today, sorry guys, a property that was contracted to be built last October. So we're talking 1 year ago. This is an example, personal example for me, a house that we have under contract right now. Sellers purchased that property, contracted it with the builder October 2019. They now need to put that property on the market. They have been able to list and put their property under contract so much higher because builder costs have gone up. Homes are priced higher now than they were last October. The sellers are able to pay all of their closing costs and walk away with a profit. So in a 1 year time, the house took 8 months to be built. They've only been living there for 3 months. So within 3 months, these sellers had enough equity to sell their property and still make a profit after paying all their closing costs. Obviously, that's maybe a more unique situation to where we are in North Florida, and timing just happened to work out very well for them. But, we are seeing builder costs go up 6% increases, 8% increases, and they don't have the inventory to support it. So if you're looking for new construction, be prepared to wait, 6 to 8 months for those homes to be built, which again puts more strain on that resale inventory level, because if you don't have the time to wait, if you're moving here, if you're relocating and you need to be into something now, then you have to go, of course, to the resale market. So these are just a lot of things that are impacting our Northeast Florida market. And again, it's impacting the national market as well. Projections. So this kind of goes back to what we were talking about a slide ago. Hey, is this a good time to buy? Should I wait until next year? No. Pricing projections over the next 12 months. So these were done from September 2020 on. There's a bunch of different resources, a bunch of different, economists and people that track statistics going forward and do projections. People like Zillow, National Association of Realtors, the Mortgage Bankers Association. You've got Fannie Mae in there. So the government loans. Where are they projecting housing prices to go over the next 12 months? And as you can see, everybody is projecting an increase. So if you are planning on waiting, probably not your best move. Make that move now. Take advantage of the historically low interest rates, and also lock in a price that is where it's at today versus the projected increase for where it will be at tomorrow. Any questions? We've got a bunch of people watching right now. Welcome, everybody. Again, this is Kelly with Welch Team Keller Williams. And if you have any specific questions as we go through, I'm happy to try and answer them to the best of my ability. And I am watching those comments. So let's keep moving forward. So what are we watching over the next couple months? It's really hard to talk about the election without getting everyone's emotions all riled up, whether you lean to the left, lean to the right, you don't know who you're voting for, you know exactly who you're voting for. What we do know about the election is that any election season, there is a slight little hiccup and we see some uncertainty. Right now, that doesn't really seem to be happening, at least in Northeast Florida. We are still moving and shaking. But what we can predict is that even if there is a hiccup, even if that does create a little speed bump nationally for some of the real estate markets, that settles down and basically self-corrects within approximately a month. That's been proven time and time again. It doesn't matter who wins, incumbent, new, Republican, Democrat. It is just a temporary slowdown. And then we see things tick right back up. We're watching interest rates. So we just spent a lot of time talking about how interest rates are really going to affect buyer affordability and buyer purchasing power. So we're certainly tracking those right now. They have been kept artificially low to help keep the economy going by our government. So we obviously have to track those interest rates to see what will happen with that. If interest rates start to tick up, then certainly that will impact our next category, which might be inventory levels, and it might impact or most certainly will impact what you can purchase. So right now, inventories are very, very low. We are seeing that across the board. And with that low inventory, those prices have gone up, and we anticipate those prices to continue going up. Hospitality market. So the hospitality market, as we know, has been really hard hit by COVID, and our heart goes out certainly to everybody in those sectors because they are really the heart and soul of what's driving, consumer spending. And there's only there are only so many factors that we can account for in the hospitality market before that starts to topple backwards. If we don't see an additional round of stimulus, if we don't see, unemployment numbers decreasing in those sectors, then those workers who make up a large percentage of our population, certainly in the Northeast Florida market, fortunately, not as much as other areas of Florida. We know that Florida is such a tourism-driven state that those hospitality markets have really suffered. And what happens if the hospitality workers, they don't have money, and then those businesses fail, and the people that would have frequented those businesses now can't spend money there, and then the people that supported those businesses, it's a backwards domino effect of what could happen. So we're tracking the hospitality market and consumer spending, as I just mentioned, what will happen to consumer spending over the holiday time frame. Amazon Prime Day right now, and I know that there are a lot of local vendors who despise Prime Day, because if we're not going and shopping at the local vendors, then that consumer spending is going to those large national companies, and it's not being filtered back into our local economies. And those local economies are really the ones that drive, some of the housing market here as well. And then, what's happening with vaccines. So obviously, vaccines go hand in hand with how safe do people feel getting out and about? How quickly is the American economy going to be able to open up fully? We were told 12 to 18 months originally, and here we are, and we're staring down 12 months rather rapidly. And so, we, in the last 24 hours, we've had news come out about some vaccine, like Eli Lilly, and halting some things that are happening with the vaccines. So, depending on when those come out, depending on how, the majority of people feel about them, do they go get them? Does this help our businesses open back up full strength? We have to obviously watch for that as well. So there are a lot of things that, of course, go into our local real estate economy. But for the most part, we are watching some of those key pieces that I just pointed out. I don't see any questions right now. I know that there are still a bunch of people watching. So if anybody has any comments, please feel free to type those in real quick. If you can't think of anything right now, but you do want to ask us a question later, we're always available for you at any of our social media channels. Just search for Welch Team, WELCH Team, or welchteam.com. You can give me a call at 904-323-2952. And we look forward to you joining us again next week. Hopefully George will be back with me, and I will maybe not talk so fast, but for now, it was a pleasure sharing this information with you today. I hope you all have a great rest of the week. And at least for those of you watching in Northeast Florida, I hope you get to enjoy some cooler temperatures.